Welcome back to Bazaar Morning Call. Well, let's get Deven Choksey into the conversation now to discuss a lot of numbers and some themes which are playing out very well, though. So let's take it straight to him. Deven, hi, good morning. I wanted your thoughts first on Siemens. Very strong set of numbers coming through. Margins have expanded. The board has now approved the demerger of its energy business into a separately listed company. So that added advantage is there. I wanted your thoughts on, for people who've missed out on the rally in Siemens, is there still more to go?
Well, I think good morning, Sonia. Well, I think the valuations are absolutely at peak currently in most of the stocks which we are talking about. And that could be one of the reasons for which I think little reserved opinion at this point of time in buying afresh into the capital goods segment in particular. Undoubtedly, I think this particular segment is going to experience significantly large amount of business for next 10 years. However, I think the point here would be that at what level one should be buying into. In my understanding, I think currently the bigger amount of tailwind is also the allocation of funds into these sectors. And as a result of which, I think we are seeing the higher amount of participation, particularly from passive funds. That's not a very good sign, particularly for me, because I think when you are seeing the participation coming in from passive funds, they are basically momentum driven. And when they get out, at that time, I think it is the best time for investors to buy into those stocks. So maybe given the stretch valuation currently, I may wait for a while before I consider a fresh. At the same time, the holding in the portfolio of the existing stocks, I think will continue. That will not get shared or parted from the portfolio at this point of time.
Okay, all right. Hi, Deven. Good morning and good to see you win. Deven, what about Shree Cement? Beautiful set of numbers out there. And the EBITDA per ton continues to trade above what Ultratech as well is delivering. And on a sequential basis as well, there was no decline. Your view on the stock, the problem for Shree Cement is the numbers are very good, but valuations are elevated, and there is still that overhang of what's going to come out of the income tax, query that came out to them. How would you approach the stock?
Yeah, Nigel, good morning. Well, I think cement in general looks, I think, very appealing and absolutely convincing. On one side, most of the companies have been expanding their capacity, so they are getting the volume-led advantage in respective period of time as far as the numbers are concerned. On the other side, given the kind of controlled input cost, the energy cost in particular, is basically suggesting that the margins are on a positive side. Impact on the margin is on the positive side. Along with that, the demand continues. So I think typically the January to June period in a particular calendar year is a good period for the cement in general because of the projects which are basically required to get completed before monsoon. They would keep demanding higher amount of volume at the same time. So all in all put together, I think likes of Swiss Cement, likes of Ultratech, even ACC Ambuja, where the capacity is on their side, they are relatively looking much promising, much better. Even some of the regional players like Ramco in Southern Belt definitely, I think, appears more promising at this point of time. You are right on the valuation side, but that is a general problem with the entire market. Significant amount of cash is available into the system, as a result of which most of the stocks are quoting at a valuation which is not cheap. And that's where probably I think one would like to buy when the market gives opportunity at a moderated level, at a reasonably good level to enter into.
I want you to just sort of, Deven, morning, pull up these names, right? I mean, these intradays, and you'll see the kind of action we saw yesterday. And Deven, I want your comments. PSUs was basically red hot. So if we can have these up, Cochin Shipyard, I'll just start with that. Big kind of mover. So, it's the point is many times momentum rotates from one place to the other. And yesterday, of course, PSUs did very, very well. NHPC should come up next. I mean, just quickly, if you can pull these up. IRFC, I mean, if you'll be able to see what I'm talking about. There is Hutco, which went up sharply. RVNL was up, big time. EIL. And across the board, I mean, doesn't matter one or the other. IRCON, it was sector agnostic in that sense. IRDA, Railtel, Bharat Dynamics, Garden Reach. So it was, railways, shipbuilders, infrastructure, all kinds of names which went up on very large volumes. Actually, the single largest volume traded sector was the PSU space. So, Deven, just wanted your thoughts on what happened yesterday and Do you like anything here? And any way to play this? Momentum begets momentum, as they say. Gains beget gains. But your thoughts?
Yeah, Prashant. Good morning. Well, I guess I think the last week the challenge was that one of the large hedge fund probably had to unwind their position, which was long position in PSU and short in the FMCG. So I think that unwinding took place. FMCG moved up, PSU came down, and it was a significantly large portfolio, I think, which probably got offloaded and squared up. So the market had a sharp fall. However, I think the bulls are in no mood to give up the kind of a momentum into this particular stocks, largely because of the fact that two, 3 A's are working. On one side, the PSUs are basically going to be attracting larger amount of investment. Also, because of the fact that continuity of the government post-election would mean higher amount of business continuity for them. And that's where probably I think the one school of traders believes that it is good time to buy when the stock has been hammered down for other than the fundamental reasons. The second part, of course, is the liquidity. I think the liquidity in the system is so huge today that I think where to allocate money is a challenge for the fund manager at the same time. And that's where I think whenever you see any particular stock beaten down, I think immediately there are people who are buying this stock into the market. I don't think that the PSUs are to be neglected, but at the same time, I think chasing the momentum is not something which I am always very comfortable with. So we will, I think, selectively staying invested in some of the select names, but not across the board for the PSU as a space.
Okay. The other thing, Deven, that we realized in this earnings season is that the rural demand seems to have come back in a big way, right? Whether you talk about it across the board, I mean, if you look at Hero MotoCorp, Colgate, the margins were at all-time highs, Dabur. In fact, even HUL said that they are seeing green shoots of recovery in the rural markets. So from this entire rural focus theme, which are the stocks where you still see more gains now?
Yes, for me, I guess I think each of these companies where the consumption pattern is emerging stronger, I guess I think they are relatively remaining on a preferable kind of a outlook as far as in the individual portfolios are concerned. Take a case of HUL for that matter, or take a case of I think Britannia for that matter. I guess I think all these companies have two things in particularly common. One, they have the one side advantage of contained input cost, which is suggesting that the margins are relatively more protected than before. On the other side, I think the rural demand is increasing and increasing in a higher of the single digit. So definitely, I think this is a good sign because of the distribution reach that these companies have created over a period of time. But everything is in price. Again, I must say, I think that today, even though they look, I think, promising, everything seems to be in price to me at this point of time. Uh, Most of the things are driven largely by the liquidity and the momentum. So that is where one will have to be a little bit watchful about. If we are holding the stock, we continue to hold. Within the discretionary spending, I think we continue to remain bullish more on in the area of, as you mentioned, two-wheelers. We find, I think, that is one space, I think, which will continue to give higher growth. Maybe, I think, in the festive season and after post September would be, I think, the interesting time to watch out for. So the quarter, July to September, would be a typical quarter in which I think some of the two-wheeler companies, even the passenger vehicle business of Tata Motors kind of companies or Maruti for that matter, should be seen a good amount of buying attracting in this July to September period in the portfolio of the investors. When I think these stocks are comparatively likely to be available at comparatively lower prices.